how money moves inside a bank. We need to understand it as we should know end to end system flows across banking platforms. Let's see the end to end money flow in a bank. Firstly, the customer will deposit into a bank, then bank will create a strategy on pooling those funds, such as probably giving that to a borrower or investing in some bonds or treasuries, or maybe reserving some capital. And the next step is bank will lend the money to either the borrowers, and borrower will repay, and that is how the liquidity would be managed. So let's understand the each step in detail. So firstly, the customer will deposit the money, and that deposited money bank will record it as liability, as bank need to return that money to the customer back. Next step is bank will create a strategy on lending that money. Maybe lending, that would be the major portion, investments in bonds or securities, and reserve requirements. Next step is lending and repayment. So bank will lend that money to the borrowers at a greater interest than what at a greater interest than the interest that they need to give to the customer. And after that, borrowers will repay with interest to the bank through EMI or other options. And difference between the interest that bank will charge to the borrower minus the interest that bank would need to pay to the customer is called the net interest margin, or NIM. Then payments and investments. Bank will constantly move their money through various payment methods such as ACH, wire transfer, and payments. And then bank will invest that money. So beyond lending that money, bank will also invest that money in government bonds or treasury securities. Risk and liquidity management. So regulatory body has made it mandatory to keep a minimum percentage of deposit into the reserve at all times. And bank performs stress testing all the times. That is, bank will simulate crisis scenarios to ensure stability. That means not all depositors should withdraw at once. So let's summarize what all systems that business analyst needs to focus on. First is account system. So in account system, business analysts would need to focus on deposits, ledger updates, and core banking platforms. In for loan systems, it would be origination, disbursements, EMI tracking, that is equated monthly installments, and NIM reporting. NIM stands for net interest margin. Payment system, ACH, wire transfer, card networks, interbank settlement. And risk systems, fraud detection, credit checks, and liquidity monitoring.